Hello and welcome to the Wednesday check-in here on Landy's Crypto Corner. Today is February 12th, 2025, and Bitcoin is, well, still playing on the lower side of the range. We did see one close below the $96,000 level, but, as I had mentioned on Monday, 95 to 96, kind of the area that we need to see hold up on a closing basis. In the Wednesday candle, of course, we have the Thursday candle open. Still Wednesday for me, though. We did see that Bitcoin swung the lows of this local consolidation here and popped back up, but did not set a daily closing low just yet. So let's investigate a little bit further and kind of see where things are. Of course, I've mentioned this before. Bitcoin is in a daily downtrend. We have our lower low here, lower high, and of course, lower low swing. And lower low closes here. Now, if Bitcoin does set a low here, we would see a higher low swing, but I still need to see Bitcoin closing above now at minimum, the 106,500 area to break the downtrend. Many are calling out the area around 102,600. I don't think that's good enough to break the downtrend in my personal opinion. And if it did break that area, I would still look for higher low, equal low structure if it came back down. Now, Bitcoin's still, living below the basis band of the Bollinger Bands here in bearish territory and still is threatening to run the actual lows down here, but we'll investigate a little bit further to see if that is viable for the bears here. Let's go ahead and take a look at a few other things at this particular moment that might be of interest. We do have a moving average crossover on RSI here. This is an advanced RSI. This one is a paid indicator. There's plenty of free ones that have different metrics on them that you can search under the indicators tab. This one just happens to be from, I believe this is a caretaker RSI from, I believe through Eric Crown's store there that he has. I like that it has some interesting settings that you can set for yourself here. You don't necessarily have to have this. There's plenty of RSIs that have areas of interest and levels that can give you printouts for the actual numbers, the price numbers for each RSI level. But I like to support the devs over there. As many of you know by now, my indicator that's free and linked in the video description down below on YouTube or in my profile on X is, it has some code that I asked the caretaker if I could use. So I'm a big supporter of anything that the developers that work with the Crown over there put out, as they've allowed me to use some of their code as long as the indicator is free, and my indicator is free. You can find it in the profile link on X and the video description down below. So let's take a look at a few areas of interest on RSI. We have the scale midline at 98,940, so basically $99,000. That is the 50 read right here. The bearish control zone is at 93,164, just below the weekly close open that we were calling out on Monday, which, by the way, did get a wick thrown at it in yesterday's price action, and the bullish control zone up here. So the edge of the bullish control zone is coming in at 105,400 or so. So those are some areas to pay attention to on RSI. We did get a moving average crossover. Doesn't really mean a lot until we see a low set. Then we can start looking towards the higher prices, right? Another area of interest, and of course this is another, I believe this is a KVDB indicator, if I'm not mistaken. The advanced Stoke also has some bells and whistles. You can get plenty of free Stoke indicators that have fancy bells and whistles built in, as well as the pivot price for a crossover. In this case, this one has other things that I don't really talk about much here in terms of DMI and ADX. You can get a free indicator called the BA Pig Reverse Stoke Panel. This has the crossover numbers for Stoke. Now, this is a regular Stoke, not a Stoke RSI. Stoke RSI just measures the velocity of RSI. This is measuring our close over close price momentum here. And in this case, any closes back above, as you can see, there is a cross back up here for momentum. possibly indicating that on the low, this has a little bit of upside juice to it in terms of kind of momentum and pressure as it relates to the closes. And that pivot number is going to be at 95,700. So something to keep an eye on during this Thursday session. Now, where would a low be set? The prior criteria that I was pointing out was, I want to see closes above 100,235. We will see a technical low set and a higher low on a swing set on closes above 98,500. I would still caution price action below 100,000 to 235 or whatever it is up here still doesn't do much, right? It's a big trading range on lower term timeframes, yes, but it doesn't do much until we start seeing closes back above 100,235. Although we could see a swing higher low and a closing lower low set on closes above 98,500. So that is what the bulls need to shoot for, at least over the next few days here, while maintaining this low structure. Anywhere below yesterday's low at $94,000, which was a swing at the closing higher low structure here, a little bit of a front run of this 93,500. Anywhere below 94, I would expect that weekly closing higher low structure at 93.5 to get tagged and possibly lower down into the supports that we're going to look at right now. So let's go ahead and turn that on. We've got our local areas of interest here. You can interpret these as support and resistance or supply and demand, however you'd like. We can see that we did get an ever so slight close open below the $95,000 to $96,000, depending on your chart here. It's the upper $95,000 to lower $96,000 region. But Bitcoin did hold the lows here after swinging it on a closing basis. And of course, that low prior to when we had talked about it, the Sunday low was at 94,730. So we did see the close above 95 to 96 or in that zone. So, for now, we're not looking too much lower. You can see that the lower second standard deviation of Bitcoin does fall through 96 and eventually through that 95. Keep an eye on $94,000 and the lower second coming in line with that weekly higher low close. Not higher low swing, but higher low close. And that is, of course, at 93.5. And anywhere below there on closes, we would look for expansion into support down here at 92 to that 88,700, where we did get that swing low at $89,000, a $300 front run of this 1.168, and the low swing of this higher low on the way up here, coming in right on that level. Again, this is a 1.168, not 618. So this is 16.8% above a fib pull from the prior cycle high at $69,000 to the bear market low at 15.5. And you can see we're trapping between there and the 1272 with some deviations to the top side here. And in general, it's still just a consolidation range, right? So not much to do, or not much really to even talk about, quite frankly, unless it were to break down below that 88.7, start to lose the lower $87,000 region, and then finally the first bearish candle from the expansion up into this range, which is at a low of $85,000. Then we can start entertaining further downside, mid to low 80s, and then mid to upper 70s. But for right now, that setup is not presenting itself. So all of those that you might see that are screaming for it on your timeline, the setup's not there. So, they can keep screaming about it. Maybe eventually they would be right. But while it's still in the range here, it's just consolidation. And we are starting to see the criteria start to present itself for the bulls to take advantage of a nice swing higher low, possibly move up to overhead resistance. If Bitcoin does start to move above the Tuesday high here at 98.5, be aware of where the basis band is. Of course, this is a 20 simple moving average. It is right there at 99.5. Then we can start entertaining, looking towards that swing high from Friday, February 7th at 100,200. Above there, I'm looking 101 to essentially 104 again by this 1272 up here. Anywhere above there, 104 to 106 basically by the upper second standard deviation. And then above there, 106 to 108 by the upper third standard deviation. Any breakouts above there would initiate expansion above support here, targeting the actual all-time high at 109,360 or so and above. Again, on any expansion above the current all-time high, I'm taking it $2,000 at a time until 112. So essentially 110 to 112 would be the area of interest above the 109,500 or so. And then 112 to 115, 115 to 120, 120 to 125, 125 to 130, as I would be looking for Bitcoin to make its way to the 1414 up here at right around $128,000. So give it some room with the 125 to 130 up there. If we did start to see, closes above there, the next major fib level is that 1618, which is at $173,000. And I do think on any closes above 130, 150 is the next natural target, big whole number up there. And then above there, look into, between 150 and 175 as like a wider area of interest that we can start narrowing down, more local areas of interest if and when price does get there. It will get there eventually, no matter what, in my opinion, but it's a matter of does it get there from here, right? And for right now, it's just a consolidation, so not too much to worry about if you are bullish, and not too much really to get excited about just yet if you're bearish. I mean, it's a range play, playing support and resistance. It's beautiful for trading. It's big volatility and lower term time frames, so it's been fun to trade a range. I'd like to trade a breakout. That'd be nice, either to the upside or the downside. Breakout to the upside, break down to the downside in this case, but also okay and content with a range. Now, obviously, alts not liking Bitcoin ranging around, and memes especially not liking it as they're taking the hit on their liquidity. So, they'd prefer to see Bitcoin breaking out to the upside and going on a run, so their US dollar pairs can actually get some rising price action there. And then hopefully start to kick off for those that are paying attention to Ethereum, starting to kick off alt season. Yes, Ethereum will kick off alt season. I'm going to stick to that. You're not going to get me off of that one. I'm sorry. Like Solana and XRP and all of the rest that are nipping at Ethereum's heels in terms of whether it be volume or the possibility of flippening, the flippening of the market cap and all that. You have to look at TVL. Where is the TVL? Where is that going? It's going to Ethereum. And that's, by virtue of the fact of being, the chain that has the stables and the stable yield. So a lot of what's happening on Solana, I've mentioned this across various Spaces events, is that, there's a lot of volume, but it's all extractive. And where is it going? It's going to stable coins. It's going to Bitcoin. You can see with Bitcoin's dominance rising. And then, of course, it's going to fiat. So, and I do want to point this out from a fundamentals point of view. Exchange reserves, big drop off for Bitcoin here that we've seen recently. It's kind of tracking sideways and up here. I expect another leg down here pretty soon in terms of exchange reserves. What does that mean? That does mean that there's less coins on the exchanges. So when there is any kind of spot selling, it's having a magnified effect, right? Well, we can see that we can see in Ethereum that we have a big leg down in exchange reserves as well. So for those wondering if Ethereum is being accumulated right now by the big players, well, it absolutely is. So keep your eyes on Ethereum. I think Ethereum is in a very, very large range. And when this range does resolve, things kind of go crazy. And I think by virtue of that fact, I think alt season will be a little insane as well. I think that's all I got for you today. I'll be back on Friday with the Friday wrap up. And I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, and above all, stay safe and stay in the game. Don't get lulled into a false sense of security that things are just going to go sideways forever and you're just going to catch it. Pay attention to what's going on. stay engaged. And, if you've got conviction plays that you are determining are going to be good for you in the long term, maybe take a look at what's going on and entertaining possibly adding to those conviction plays, or rotating into conviction plays that you think are going to be doing well. Of course, this is not financial advice. Do your own research, all that good shit. You have a wonderful one. Landy out.